All right, welcome to the program. This is the interview segment, and I have Mohamed El-Erian joining me right now. He is the Chief Economic Advisor at Allianz. Allianz, of course, is one of the world's largest wealth management and insurance companies. Mr. El-Erian was also the former Chief Executive Officer and former Chief Investment Officer at PIMCO, which is the world's largest bond fund. Welcome, Mohamed, to the program, and thank you for joining us all the way from California, United States. Welcome.
Thank you. It's a huge pleasure to be with you. Thank you for inviting me.
Okay, let's jump right in. Economic activities are contracting around the world right now. U.S. contracting about 32.9%. The Eurozone, we're having a contraction about 12.1%. Of course, for different countries in the Eurozone, such as France, contracting 13%, Italy 12% contraction, Germany 10% contraction, Spain 18% contraction, China, surprisingly, 3.2% GDP growth for the second quarter of this year after a contraction in the first quarter. Coming down to Africa, just yesterday or 2 days ago, we got news that the South African economy contracted over 50%. Nigeria's economy contracting 6.1%. Please, can you just help make a sense of where the global economy is right now?
So we have had the biggest simultaneous contraction of GDP ever in the second quarter. And you've cited the numbers, and the only reason China was the exception is China had the contraction earlier. And everybody knows why that happened. We had a health-related economic lockdown. So that's history. We had a sudden stop to the global economy. We are now on a process of recovery. It is what I call a bumpy journey to an uncertain destination. So the journey is bumpy, the destination is uncertain. And what I do know for sure is, unfortunately, we're not going to have a V-like recovery where we bounce straight back. It's going to be a much more bumpy process than that.
Mohamed, do you think that the primary definition of economics by Adam Smith is a bit narrow right now because of this public global health crisis induced economic crisis? For some of you that are economists and all of that, the way Adam Smith defined economics, is it a bit narrow right now with the induced coma which we all suffered in the last few months?
It was narrow beforehand. I think what's important is economists are trying to catch up with a new concept. I've labeled it the human counterparty risk. And basically what happens when people don't trust each other? What happens to economic activity when you and I don't know who is healthy, who is not healthy? It contracts. Borders get shut. People are less willing to engage. So what economists are quickly trying to incorporate in their thinking is this element of lack of trust between people. We know what happens when you have lack of trust between institutions, but this is new.
If we take a look at how global central banks have responded to this crisis, we know that from the crisis of 2008, 2009, that global central banks went above and beyond traditional policy measures into introducing quantitative easing and what have you. How would you categorize the responses of global central banks across the world?
Most of what they've done was unthinkable only 7-8 months ago. The mindset right now is all in, whatever it takes. And what we have seen is a massive response by central banks to make sure that you don't get financial paralysis as well as economic paralysis. The last thing central banks want is the financial system, the tail of the dog, to start wagging the body of the dog, which is the economy itself. They don't want a feedback loop from bad finance to bad economics. The good news is they're very committed to do whatever it takes. The bad news is that what they're doing is necessary but not sufficient. And that's why there's a lot of people who are worried that we may run out of ammunition
Are you, how worried are you with that? Because from 2008 that we've seen the global central banks responding. In the case of Nigeria, for example, the central bank opened its taps. We've seen also in in the Eurozone area. We've seen in the United States the case of helicopter money and all of that. In fact, when the going gets tough, the central banks, since the financial crisis, have become the first responders. But the question there is, how sustaining can this be? How sustaining, really?
It cannot be sustained. And it's not because they're going to run out of ammunition. Most central banks have a printing press, and they can print as much money, electronic and physical, as they want. What you have to worry about is the unintended consequences, the side effects. Think of you coming to me as a doctor, and you have a medical issue, and I don't have the ability to fix it, but I just keep on giving you painkillers and giving you more painkillers and more painkillers. At some point, the side effects of the medication I give you becomes problematic. And I fear that we're getting very close to that. So it's not an issue of running out of ammunition. It's the risk of unintended consequences.
You know, what also worries me, Mohamed, is how would the economies, global economies from the US to China to the rest of Asia to Europe, how would these economies be weaned out or be weaned off the stimulus? You know, because we're having income support across the world. The United States, given paychecks of about $1,200 US. Here in Nigeria, some kind of cash for our citizens. In South Africa and the rest of other African countries, some economies are doing as their pockets deem fit. You know, so when will the economies be weaned off of this support? And if they are weaned off, how well will we do?
So, you know, I wrote a book on this called The Only Game in Town.
Yeah.
Because central banks were the only game in town. And this is the big lesson of the 2008 financial crisis, which is central banks can win the war against a global depression, but they cannot secure a piece of high, inclusive, and sustainable growth. And that's why we remain reliant on central banks, because what you need is a policy handoff. And that policy handoff has to do two things. One, increase productivity and growth, the supply side, and two, make household economic security go up, make people more comfortable. Central banks cannot do either of these things, not because they're not willing, they're not able, they don't have the right instruments. So you need a handoff to other economic authorities. And that handoff has proven to be very difficult in both advanced and developing countries.
Are you seeing some kind of efforts towards sustaining recovery globally? Or we shouldn't even be talking of recovery right now. Perhaps what we should be talking about is living better with COVID-19?
So we should be talking about four things. One of them is simply relief, helping people who got hit very hard for no fault of their own. The second is exactly what you said, living with COVID-19. We're not going to have community immunity, herd immunity for a while. So we have to learn to live better. We have to learn to live with healthy economics. But there's two other buckets. If you look at the longer term effects of this shock, they are negative. We are going to see increased industrial concentration. We're going to see deglobalization. We're going to see household economic insecurity. So we also need to deal with these two issues now. Otherwise, once again, we will win the war, but not secure a piece of high and inclusive and sustainable growth.
Mohamed, which region of the world do you think has weathered this storm more than any other region?
So the one that has surprised to the positive so far is Africa. I think a lot of us back in March were very concerned. I remember an African friend of mine telling me, you don't understand, if we get an outbreak of COVID-19 that's really bad, the choice for most people is going to be between starvation due to lack of income or dying from the infection. So we don't want that. And a lot of us were very concerned. So the good news is Africa so far has had rather contained outbreaks. And that is wonderful news, wonderful news. But the recovery of Africa, unfortunately, is a function also of the global economy. So I think the ones that are going to look better to begin with are the large economies that have the ability to internalize a lot of the economic activity. So China is going to look better. The US is going to look better. After that, it's going to depend on whether you get the transition in policies.
You know, before this COVID-19 crisis, there used to be some kind of distinction between emerging markets and developed markets. But do you think that we are all on the same level right now, brought together as a result of this pandemic, as a result of this global crisis, induced economic crisis? So we're all on the same level right now for EMs and DMs?
We were initially, we are no longer. I mean, we were initially because everybody got hit by the same thing and reacted in the same thing. But what we're discovering now is that resilience matters. Financial resilience matters. What the US can spend to protect its population is very different from what the poorest developing countries can spend. So resilience matters. In fact, one of the tragedy of this shock, whether you look within a country or whether you look across the world, is that it will increase the inequality of income, wealth, and opportunity. And that's why it's really important to have a multilateral global response to what is a global problem.
Where do you think that this growth will start from and continue? At the beginning, I did talk about growth, GDP growth for China at around 3%. Do you think, since it has started from there, and that was the origin of this pandemic, it has started, do you think it will continue from there?
It will, and we'll see growth rates pick up in the third quarter, but it is not the V. So think of it. There's an image, you come down and then you come straight back up. And you look back and you say, I crossed the valley, it was awful, but I'm on the other side. This looks more like you come down, then you start going up, and then you level off. And you level off at a lower rate than where you were before. And that's what's going to happen unless, and I stress, unless we go beyond relief and living with COVID and also deal with the longer term consequences.
Mohamed, that looks to me like a square root shape, you know, because
it is a square. It is, you're absolutely right. It is a square root shape, a little bit sort of skewed, but a square root shape.
Yeah, because I was almost coming to, is it going to be a V, a W, a U, an L recovery, or yes, a W? Now you're giving me a square root kind of shape.
Correct. And within that square root, you get what's called the K recovery. So what you get is people who, the strong gets stronger and the weaker gets weaker. So, you know, we can go through the whole alphabet, and it tells you how complicated this shock is. It is truly unprecedented.
Where does the U.S. elections, how does the U.S. election play out in all of this, Mohamed? You know, because President Trump, if you take a look at when he came in January 2017, he inherited 19 months of recovery strategically, you know, till when this pandemic struck. So where does the U.S. election, what position is the U.S. election in all of this in global economic recovery? And perhaps is the health story too a bit of a contaminant for U.S. recovery, because we're seeing that U.S. is not really doing well with handling the pandemic?
We're not. I'm in California, and we had to go back on certain elements of the lockdown because people weren't listening to the guidelines. So no, we're not doing as well as we could do. In terms of the election, look, when you get such a shock, the focus goes inside. And we've seen the US do this on turbocharge. Not only America first, not only tensions with China, but withdrawal from the WHO in the middle of a pandemic. Who would have ever imagined that? So if you go forward after the election, most people expect the following. If Mr. Trump is reelected, it will continue to be a very inwardly looking US policy. If, however, Mr. Biden is elected, I think he will try to reestablish the US engagement on the global level. It doesn't mean that the tensions with China will disappear, but it will mean a lot more involvement in multilateral discussions.
Okay, just in 30 seconds, the stock market is bullish despite all of this, and I'm wondering where the steam is coming from. In 30 seconds.
Central banks.
Oh.
The fact that you have ample and predictable liquidity support from central banks has allowed investors to take way too much risk.
Thank you very much, Mohamed. It's so nice speaking with you from California. We'll do this again sometime. Thank you very much for waking up so early, 7 a.m. in the US. Thank you.
Thank you.
All right. All right, that's the much we can take with my guest. We'll be right back. Thank you for watching our video. Please hit the subscribe button below, turn on post notification to follow all our updates.